When you step into an airplane cockpit, every single switch and dial is placed with absolute intention.
Right, exactly. It's a highly engineered environment.
Yeah, it's the environment where split-second decisions are made, where risk is managed, and, well, where a poorly placed control could literally cause a crash.
And honestly, a trading platform is no different.
I mean, it is the direct interface between your capital and the market, right?
It really is. But far too many traders treat their platform like generic software they just download and forget about.
Yeah, they don't even think about it.
Right, without realizing that the architecture of that software actually dictates their execution speed, their market access, and ultimately, their bottom line.
Which is exactly why in today's deep dive, we are unpacking the ultimate trading platform debate. We're looking at MT4 versus MT5.
Yeah, we've pulled together technical documentation from MetaQuotes, some brokerage backend implementation guides, and quite a few notes from algorithmic trading forums.
And our mission today isn't to just declare a winner based on release dates. We are here to figure out which setup actually matches your specific trading strategy.
Because fighting your platform adds totally unnecessary friction to your day.
Exactly. So before we look at the technical tools, we have to establish what you can actually trade on these things.
Right, because their foundational architectures are completely different. MT4 was built specifically for decentralized spot Forex.
Okay, let's unpack this. So MT4 is basically like a highly specialized sports car built for a very specific track, right?
You have a great way to put it.
It gives you everything you need for one very specific high-speed mission trading currency pairs, whereas MT5 is more like an SUV built to explore different terrains.
Or even the bridge of a commercial airliner. It was designed from day one for multi-asset trading.
So it grants you access to things like indices, commodities, and stocks.
Right. MT5 routes trades directly to centralized exchanges, whereas MT4 routes directly to a Forex broker.
But wait, does having all that extra multi-asset baggage make MT5 cluttered for a beginner?
Well, what's fascinating here is that the interface itself is actually really accessible. It scales to your needs.
Okay, so it's not overwhelming.
No, it's really a growth decision.
Yeah.
I mean, if you start out with currency pairs but want to expand into metals later, MT5 gives you room to grow.
Without forcing you to relearn an entirely new environment down the road.
Exactly. So once you know what you're trading, the next question is how you analyze and execute.
Which brings us to the practical differences under the hood.
And MT5 undeniably has the technical superiority here. You're getting 21 time frames compared to MT4's 9.
Oh, wow, that's a big jump.
Yeah, plus more built-in indicators, extra pending order types, and crucially, a depth of market feature.
Meaning you can actually see the order book, right? Like the specific volume of bids and asks.
Exactly. And it has a much more advanced strategy tester for optimizing automated systems.
Okay, but here's where it gets really interesting, because there's a massive catch.
A huge catch, yeah. MT4 uses MQL4 and MT5 uses MQL5.
Meaning custom indicators and expert advisors do not transfer between the two at all.
They don't. MetaQuotes couldn't make them backward compatible because MT5 was built on a completely new framework.
So if a trader has spent years building custom infrastructure on MT4, is the advanced MQL5 environment actually worth tearing it all down and starting from scratch?
Honestly, for established discretionary traders, the cost of switching usually outweighs the benefits.
Because MT4's simplicity is an actual advantage.
Right. Continuity has real financial value. But for a system-driven trader who is starting fresh today, MT5 is definitely the stronger long-term foundation.
So the right choice really just comes down to friction. You pick MT4 for a focused, familiar Forex experience.
And you pick MT5 for broader market access, complex backtesting, and room to diversify later.
Which brings us right back to the cockpit analogy. Since these platforms offer drastically different levels of tooling, how much does the actual software interface subtly dictate your daily trading psychology?
That is such a crucial question.
I mean, think about it. When you have 21 timeframes on MT5 instead of 9, are you actually finding better high-probability setups? Or are you just zooming in closer and closer, hunting for market noise to justify a bad trade?
Something to definitely mull over.
Yeah, keep that in mind before you place your next order.